Good to have you on the show. Given the fact that Sensex hit an all-time high yesterday, the Nifty didn't quite get there. But I think joining me right now is Aishwarya Dadhich, who's a market expert. Good morning, Aishwarya. Good to have you on the show. Let's first talk about the kind of cues that are coming out of Fed Chairman Jerome Powell's speech. He has indicated that the rate hike cycle may not be, nearing its end. The market was anticipating another 25 basis point rate hike in July. But given the kind of commentary that is coming out, it seems like, we could factor in two more hikes, if not just one. What are your own thoughts, and where do you expect the, terminal rate to settle in by the end of this year?
Thank you. Thank you so much for having me here. Obviously, the whole context has changed in the last week or so. If you have seen the UK inflation data, which is reported recently, and the way the European banks and Bank of Canada has raised rates, there is a very strong likelihood, almost 3/4 of a probability that there would be another rate hike in July. But we should not forget that this is obviously we are closing in toward the end part of the rate hike. Inflation last month, both for US as well as for the major other countries, including India, was pretty, I would say, healthy in that context, and there is a lesser likelihood of it to, rise again. So in that context, what I understand is, that the ability for them or the need for them to raise rates further is very, very limited. And that has made, the kind of jump that we have seen in the US market over the last couple of months, even in other emerging markets, including India. So it's just, I would say, a little more pain before we see a very clear trend of, a very accommodative policy coming ahead. India specifically already have seen, status quo. We have seen a very comfortable CPI data of 4.25 recently. Our core inflation continues to remain high, but we believe the trends, inflation's tailwinds look pretty sanguine for RBI to hold on to the rates. So whatever said and done, it is for sure that we are toward the tail end of this interest rate hike cycle.
All right, we are at the tail end of the interest rate hike cycle. Let me talk about the dream run that we have seen on Dalal Street. It has been a breathtaking rally since March this year. Do you expect this dream run to continue, given the fact that Q4 earnings weren't a big disappointment, barring the IT space? But when it comes to the first quarter earnings, which are the sectors that you think will outperform in the coming earnings season?
No, obviously we have seen a very strong rally both in India as well as the other emerging markets, including Taiwan, Korea, even in the developed countries like US. Coming specific to India, we believe there is more legroom to this rally. If I see the last couple of years, the kind of momentum we have seen this particular couple of months, I think it is completely different. First of all, a lot of people will get surprised to see this rally, because if you remember a couple of months back, we were all very, uncomfortable with the credit crunch which was happening with the fall of a lot of those SVBs and banks like that. And all of a sudden, we are seeing a very good turnaround in the market. And the reason has been that we have seen a very strong inflows by FIs, which has been to the tune of more than $9 billion for India specific. Right. At the same time, as you mentioned, the earning growth for the last quarter was pretty good. So that has all supported to the rally so far. But what gives us more confident to say that the rally will sustain here is that the valuation perspective, we still have a lot of comfort. If you look at the rally we witnessed in December 21 or even in the later part of 2022, the valuations over that time were much higher. Right? As of now, Nifty is trading at almost 22 times trailing. Right, compared to almost more than 25 and 23 times trailing compared to what we saw in 21 and 22. What is more important this time around, that the rally we have seen here is more broad-based. If you see, though obviously Nifty has moved 10% in the last 3 months, but the movement in mid-cap and small-cap is to the tune of almost 19-20%. So the broadband, the width of the rally basically tells us that the strong economic momentum that we are witnessing, the favorable CAD, the favorable inflation data, the comfortable position of crude prices, this will give us more lag room to this rally. Having said that, we believe the opportunity lies more in small cap, right? So if you look at mid cap as a category, mid cap is trading at premium to large caps. But small cap are still trading at 20% discount to large caps. and even almost 25% discount to mid cap. So I believe the opportunity lies in high quality small cap franchise. That is where businesses which will able to continue to show good earning momentum will see a lot of movement in those stock prices in the coming months. Last but not the least, it's very important that, as I said, a lot of people were waiting on the sideline for this rally. So a lot of people have not have actually jumped up and participated in this rally so far. So we believe that participation will come given the kind of comfort that we will witness in the coming quarter's result. As you asked about the quarterly, estimate, I believe I think this was the third consecutive year where we have seen double-digit earning growth for Nifty. I think it has not happened in the last 15, 20 years as far as I remember. And even the expectations of this next year is very, I would say, a healthy number of 13, 14%. But quarter one will be more, the growth will continue to come from BFSI as a pack, because BFSI elements are very strong from credit growth perspective as well as very low credit cost. So that will continue to provide the much needed impetus. But a lot of other sectors, like, whether it is industrial, capital goods, your auto and FMCG primarily.
Right.
All of these sectors will support a lot of earning momentum in the coming quarter.
Right. What about the pharma pack? Do you think a lot of interest will come back into the sector amid the sector rotation that is happening in the market now?
No, so pharma is very interesting. So pharma has massively been underperforming all across, whether it is your generics or even your CDMO or all of the other players. But if you really look at the data point, if I see the last 6-7 months, the kind of US FDA OI that we have received across pharma companies are just a couple of them. I think it's not more than 3 compared to almost more than 20 what we witnessed in the last 2021 and 22. So that, I would say that interest is coming back even on the pricing side, on the generics are possibly toward, getting toward a base scenario. So we believe pharma could look interesting. But I would be more tempted to stay more in businesses which have lesser presence in US and possibly who have a higher presence in formulations. Even some of those, API players, which has been not doing well over the last 2-3 years, provide good opportunity from that perspective. Now, this China plus one is debatable, yes or no, but obviously it provides a good tailwind for growth. And all of that initiative from manufacturing from Government of India will also see a good amount of growth coming back. So pharma is giving a very, very attractive valuations, and any investor with 2 to 3 years of time frame can look at those leading pharma or API players to be a part of their portfolio.
Right. So those are the themes to watch out for in this leg of the bull run. With that, Aishwarya, thanks a lot for taking out time and joining in this morning. It was a pleasure chatting with you.
Thank you. Thank you so much for having me.